Welcome back. If you're new to the series, this is a 6 month series where I'm going to show you exactly how I trade, exactly how I make money, and I'm going to show you how you could have looked at today's session and how you could have read it, how you could have read the price action, and how you could have made money from it. Okay, simple enough. Let's get right into it. So, the first thing you want to do is get an understanding of what the market is doing from a higher time frame perspective. We already know that the quarterly, the monthly, the weekly, the daily are all pointing toward up. So, granted, that's that, but now we have to look at the smaller time frames, which are going to be 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, and 1 minute. So, I like to see, you know, price going in one direction. I like to see, on those lower time frames, on everything below the 1 hour, I like to see things in alignment. I want to see everything green. I want to see everything red. That's how I know that this trade will have a higher conviction and it will have less, genuinely less stupidity. Because there's been plenty of trades where you like 15 minute could be 15 or 30 could be like bearish, and then I'm looking to take a short or a put, whatever you want to call it. And then I'll go on the 1 minute, and then it just like it uses me as liquidity, and then it sweeps me out, and then it just goes my direction after I'd already taken out my money. That's like the most frustrating thing because you know what's gonna happen. You get in too early. You mess up on your risk, and then you don't want to get back in because you already lost. So those are a few of the biggest trading mistakes. Number one, we're going to say, shut up. So when you execute, you have to execute, right? Everything that's within your strategy, you do it and you keep moving on. If you're wrong, but the play is still viable and maybe you just timed your entry wrong, go again. Re redo your entry, right? When you're in a situation like that, when you don't know if price is going to fully just go your correct direction, you can assume half a risk size. Like if you're playing a zone or you're trying to play like a sweep or something like that, you can play half your risk size. And then if you're wrong, you're wrong. And then, but if price ultimately sweeps you out and makes a move up, let's say you're going bearish, and then price makes a move up, sweeps you out, takes your money, then now you're all sad and you're just sad because that should happen to me all the time. And then you just re-enter back with your other half risk. And then usually when you're correct, your win will eat the loss and you'll end up being in profit of at least something. So that's some some food for thought. Anyway, I hope you had a wonderful day. I hope everything great happens to you. I've had a long week and I want to keep making these videos for you. I appreciate you. I love you. I care about you. And I don't know anyone else who's making videos like this going directly on the 5 minute, directly on the 1 minute, giving you candle by candle analysis. So subscribe, like this shit up, and I'll keep making it. It's very simple. So I would need to get the overall story of what the market is doing from a lower time frame perspective, 1 hour, 30, 15, and 5. Right, I want to see them in agreement. Uh, just based on this, I didn't look at this before. I just put the chart on because I want to test myself. So overnight session, we made a move up. We came back down. Right, we made this little 5 minute. When you get better, you can kind of see patterns before they happen. So if you want to take a break structure on the 5 minute, that's like just it's too large. It's kind of large to do that. So I would recommend zooming in on the 1 minute and seeing kind of what things are, how things are feeling, and then you could debate if to take this trade. Right? Some people don't want to take trades right out of the open. Right? If I have a pattern that coincides with, like for example, let me shut up and give you an example. Where did this thing go? Was this today's session? No. Yes, it was. Great. Yeah, I would have taken this. Look at this. This is a 15-minute halfway M, right? I would have seen this, right? And I would have said, okay, price can do either two things. We can either continue to go up, or this could be a 15-minute M. Okay, because we already went up like what, $4 overnight and whatever session you want to call this. Yeah, so I would see this 15-minute M. This is obviously before the market opens. I made it so it looks like that, and then I would be like, okay, I'm interested. I'm very interested, and then I'll go on to 5. Yeah, I go on the 5 and I say, okay, more confirmation, another 5. So within the 15-minute M, there's 5 in M. Perfect, right? That's no, that's what I like to see. It doesn't get much better than that. To be honest with you, it doesn't really get better than that. It's exactly what I want to see. Come in here, right? You don't have to take it immediately upon there. You could wait for price to wait a little bit, and then could enter somewhere around here or maybe even here, right? If you wanted a true, I would wait for a breaker structure, higher high, higher low. Yeah, that market structure is all the way down there, and then we can, yeah. Once we broke below this piece, we came back up to the top. Here would have been probably better. Or if you wanted to be like super, super safe, I would have taken it below here. Then I would have entered it somewhere over here. That's if you want to be like super, super technical. And then that still would have been $1.40, which is enough money. Perfect. So that's your first trade of the day. This little move over here. Yeah, I wouldn't have seen this. I wouldn't have seen this at all because well, unless the 15 turn bullish, but you wouldn't have known that in this moment. So to say you would have seen this is, it's kind of like cherry picking. Let's play some basic market structure rules. So a lower low, lower high, right? So once I saw that we went above here, I'm like, okay, that's decently interesting. Then I would look on the 5 minutes to see what's going on, right? So let's mark this off. So right over here. I want to go in the 5 minutes and see how this would have looked in real time. Like, obviously, we can see it obviously went up, but like, let's see why, right? I know there's a zone there, but it didn't go to it. It didn't like touch it, like, you know what I mean? Even if I like draw it, it's still like, all right, like it's still not even like touching it. So oh, that makes even more sense. There's an imbalance there, so price ran into the imbalance. That makes our short position have even more conviction. And then once we got to that area, right, I would have liked for us to go into the box that I just drew, but we did not. But so anyway, so what probably happened here is every single time frame was bullish, but probably the 1 hour, 30, and 15 were probably bearish. They made a move back down to this imbalance area, and then price kind of went back up, right? But how is that useful to me? Right. So I would say once I see this these 2 5 minute candles kind of just like stable off right here, I would be like, okay, that's interesting, right? And I would look to see like this is low, then a high, or we closed above here, right? Well, technically, and I'll be interested here and look to take up to this basic U shape here, right? And then I would just take it from there. So on the 1 minute, if you want to go like under the microscope, which is like my favorite phrase, what could you have done? Shoot. So we broke above. We came back down, right? So this is nice. This is nice too, right? Interesting moves, right? You could have gotten it over here, but it's up to you, right? We already got our short position from today, and that was great. We went from 486 to 489. Yeah, that was okay. And then with this piece, let's hear higher high, higher low. I don't want to go short until we get a closure below this piece over here. So let's see if we can get it. Draw this out. Yeah, right over here. So I'm not looking for shorts until we can like really break below this piece over here. My goodness, what a long area of consolidation. Okay, so right, this is about straight. Great. So I wouldn't look for shorts until we broke structure right here. Right, we came over here. That's interesting. Oh, we had a little closure right below it, but we came right back up. So that's not enough. What you want to see is price come back down and does a little move back up and then come down, which is favorable, right? So you could have gotten in somewhere over here, somewhere here. Like we're trying to be honest. We're not trying to be cherry pickers and say, yeah, I would have gotten in here or here. Like no, let's try to be realistic. Okay, so we've seen price come to under here and made a move back up, and then it closed back down over here. So I would look to try this over here, and then I would look to see what happened, and probably take a trade right there. Right, that's a safe entry. Let's see where we can get to. I want to see us take out over here. Then previous day's low. Look at that, or previous day's high. We hit that too, right? So 487, 485. That's perfect. That's enough money for you, and I don't think that was too difficult. So you got the first trade on the open. You managed the 15-minute, you managed the 5-minute, you saw your patterns, you used them in conjunction with the break of structure, right? And you gave the trade a little bit of room to breathe, wait for a push back up, and then a closure below your break of structure level, whatever the hell you want to call it. And could have got a trade right there, and that would have been nice, right? Or you could just have a trade from the beginning of the day, and that would have been it, right? Some people like to trade right in the first hour of the day. No problem there too, right? Just to remind you that I trade SPY. I trade SPY on Robinhood. It's as simple as it gets. SPY options on Robinhood. So these contracts would probably go for I buy contracts for 1 day expiration, because they're day trades. I'm literally not holding it before the end of the day. So they're pretty cheap. They're like $180, or usually $200 per contract. So if you were to trade one and you were to get about $1 and some change, maybe $1.50, $1.20, $1.30, $1.40, you're looking at like $50, $60 per contract. So that's pretty good. And just for some basic maths, if you trade one, you make $50. Trade 10, you make $500, and it's pretty good to me. $500, that's pretty good to me. So like always, this is a game of scale. The goal is to make sure your psychology develops alongside with your trading skills to allow yourself to increase your position size, which we're going to do together. And you can get to trading 10 contracts. You can get to trading 20 contracts. You can get to trading as many as you can possibly get to, because using proper risk management. The goal is to get to 100 contracts. When you get to 100 contracts, things become very fun. If you get to 100 contracts, you make $5,000 on a trade. You could also lose $5,000 on a trade. That's very important to note. But when you have proper risk management, your losses will more frequently be smaller than your winners. So that's just some food for thought. That's the reason why I'm teaching this, because I believe you can do it, and I believe I can do it as well. That's why I'm teaching you. So we're gonna get to it together, and that's gonna be that. As always, take care of yourself. Take care of yourself for me. And I've had a long week at work. A lot of things going on. To go in today. I woke up late this morning. I woke up real late, but I still made it in. Took care of what I have to take care of, and looking forward to the weekend to do another weekly analysis and to rest a little bit and prepare for next week as well, and just continue to grow with you guys and help you guys out, and we just go from there. Anyway, take care of yourself. Peace. Love you. Bye.